Aaron Ford, welcome to Closers Club.
All right, thanks guys. Again, it's a pleasure to be here. Um, yeah, so I'll just jump right in here because who am I? Right. Honestly, I'm just an ex-construction worker here that grew up with a family construct from a family of construction workers and decided to take this chance and jump into the game. And like Gino said, I had some units before I got in here into the coaching program, and the operational piece was the problem, and we'll get into that in a second. But first of all, the team is this right here, right? So why I got into this was because I wanted time freedom to be able to experience and maximize life with my kids and my loved ones. And here they are here. I joke all the time. They want to eat every day, and it's a large family. It's kind of hard to come back from you know letting one of your kids starve or something. So I got a lot of pressure on me, and I'm the one here trying to make it happen. So I've been investing since 2018 approximately, and have a little over 400 units in JVs in the Kansas City area.
That is awesome. And Aaron, that's a testament. I have six children as well. And the Costco bills, I just sometimes I look at them and I'm like, can you guys eat a little bit less? Damn it. And they start drinking coffee, that's it. You're over. But when they start drinking wine on top of that, done. You are done, man. It's like, four people drinking. I mean, you can go through a bottle of wine and now it's only one glass each. But at the end of the week, you're like, what the heck is going on here? Would you guys chill out a little bit? But
Yeah.
I feel your pain.
Okay. So what I had in the beginning was, I was lacking operational efficiencies. And I'm just going to say this now. So honestly, I do not think that Jake and Gino get enough credit for this. Um, their operational system, and I'm not just saying this because you guys are on here, your operational system is top in the United States, in the world. And I don't feel like that's said enough, right? Because when I got into real estate, I'd read these books and hear these quotes, and people would say, you make money when you buy real estate. You make money when you buy real estate. And although that's true, I'm not here to argue that. You really make money when you learn how to operate real estate. And that's the part that's hard. Everybody can buy real estate, people can raise capital. Can you operate real estate? Like, it is so freaking hard. And to have what I would consider the top operational system in the world, which is what you guys have with Rand, it's very helpful as a student, right? I can plug into Jennifer and Jake and anybody who I ask about any sort of little intricacy in the operational world, right? And I'm new to the operational side. This is month 3, going on to month 4, bringing it all in house. Huge undertaking, but with the backing and with the education that comes along through this program and the things that are offered through my coach with Jen, and she shared her entire Google Doc, all of their forms. When I look at this system, it is really mind-boggling. And so if I just wanted to put that out there. Not enough people talk about the operational side and what you guys have figured out here. It really is amazing. So, when I work on these operational efficiencies and get my team on board where I'm more comfortable to do what I do best, which is find deals, network, right, make new things happen. And so now I have this newfound confidence to go out and make it happen again. So
Let
let's
me
jump
ask,
right
let me
into.
ask you a question before you jump into this deal. Don't you think that operating an asset also makes you a better deal finder? Because now all of a sudden you understand where the profitability is. Your buy box is a little bit different
Your
now.
vision is
Like,
clearer.
yeah, you have two-bedroom townhomes. I like that kind of asset. I like assets that may be a little bit newer. Now all of a sudden you operating and managing these assets has also made you a much better acquirer of the assets as well. And I think the other component to it is you've been to the money mixers, you've partnered up with students, you've raised money from students as well. So I don't want to focus on just one pillar. Manage right is not sexy. It's not really hard to convince people to join because you're not going to go out there and go, hey, it's much sexier to say to buy into finance. But I agree with you. The operations, and especially now in this part of the sector, it will help you. And even if you're not doing it in-house like you are, being able to hold third party accountable, being able
Know
to
what to look
share
for.
the
Yep.
cadence of accountabilities, all the KPIs, the key performance indicators that you, Aaron, are tracking, that you want your property management company to track. These are things that you need to learn how to asset manage as well as property manage. So I just wanted to add that on, and I wanted to thank you for those kind words.
Yeah, yeah. I mean, it's true. And just to piggyback on that a little bit, the confidence is overwhelming now. It's so much better because honestly, I know what expense ratio we can run at. I know exactly what it is. I know how to treat the tenants best. Like we have KPIs now where we know how fast we're responding. We're on top of turns. We're doing the 5 pound in the 5 day turn like you guys taught me. These things that make me more confident to say, okay, I can jump in this deal because I'm joint venturing. I can refinance this thing in month 13. People think I'm crazy. Like that's that's doable because I know what I can get in and do with my in-house team and with our management company. And I'm nowhere near what you guys run, but it's just that new confidence. So you're right.
Excellent.
So this specific deal, listen, I'm not advocating for everybody tears me up on this at all. I'm just saying this is what I picked this one because it's 12 units and it was a recent closing. I have a couple other recent closings. We could have went through the cookie cutter. I was a GP and raised some money or, whatever. But this one's the one I chose because we can all wrap our mind where we should be able to all wrap our mind around doing a 12 unit deal. And it's creative. So I wanted to share it. So 12 units, Riverside, Missouri, is just north of Kansas City proper. It's all in the same city. You wouldn't know you were out of the city, between the airport and downtown. So people obviously fly into the airport. They're going downtown, the plaza area. It's right past this location. So it's right on the way and so in turn becomes an okay place to do short-term rentals. Now, the key here is the city of Riverside is super pro business, and I want to go places where people treat me best. And so when we went and sat down with the city, they were encouraging businesses to move into their city because of what Kansas City was doing at the time. Kansas City is not allowing any more short-term rentals. They have a stay on them. You're either grandfathered in or you can't do it. And so the city of Riverside echoed the sentiment that was not a smart move. Bring all the business here. We'd love for you to open up Airbnbs, short-term rentals. I already had a fourplex in town with another 50% business partner. We changed all of those to short-term rentals, all 4 units, and they've crushed it. So I was like, man, I got to find some more in this little entity. And here comes this 12-unit deal. And so it's in Riverside, Class B, solid Class B location. I mean, it's right next to Briarcliff and some really A-class stuff, like I said, between the airport and downtown. These are 1970 builds, 2 bed, 1 bath, little older than I'd like, but hey, got to do the deal. No restrictions, like I mentioned.
The
And
interiors are not showing 1970s.
yeah,
Right.
these we may have gotten confused with the pictures here. These are after pictures. So
They look good.
So here's the details. Purchase price, 875,000, 73K a door. Renovations with the furniture is 15K a door. And so the income's going to increase, obviously, because we have 8 of these. I think 6 right now are done, but you're shooting for 8 minimum, maybe all 12 at short-term rentals and shooting for this NOI increase here. Now, I will say the day of purchase, the property appraised for 100K a door. So bought it for 73. It appraised at purchase 100K a door, pretty exciting there. But the anticipated value after this is all repurposed is 1.44. Now, this is also the anticipated refinance will be in 13 months. So I know sometimes people think that's quick. I'd go faster, honestly, if I could, but these community banks do things a little different. And that's what I kind of have a good relationship with, I feel like. So here we go with the anticipated value again, 1.4. And I wanted to hammer this home. So the goal is to refinance and to get all of my money back. So this is a joint venture. with another couple of people here in town, but we are all okay with just getting our money back and keeping the asset long term, right?
Mhm.
So sometimes people's strategies will change or be different. If so the way this works out is if you follow the numbers on the other screen, it's roughly um we're roughly a little over $1 million all in, and at this value, at a 75% cash out, we will be a little over $1 million loan balance. So basically, all our money will be returned to us as soon as possible, and then the assets kept long term. Like I said, that doesn't work unless everybody's on board, because if you raise money and investors want to return, they don't just want their money back. So I'm really an advocate for the joint venture. That's just kind of what I fell into, and this is what works best for me.
Where did you find this deal? How did you find the deal?
It's direct to seller, direct to seller. Actually, actually, the wholesaler that I bought from found this one, but we're also, so as my next slide will come up with here, or will show, it's important to me to not be a pain in the neck when you buy stuff. This guy he's in his 80s. He's really stuck on what he wants, and they're just when you go direct to seller and there's no real professional broker involved, it's a little different. And if you're not a pain in the neck, it comes back to, it comes to help you later. I feel like so for instance, he has a 32 unit. After closing, he said, "Hey, this went well. You kept your word. Why don't you come over here and walk this one with me across town?" And so we're negotiating currently on this 32 unit because the deal went so well. And you got to remember, these people are getting pounded with marketing and with just every wholesaler in the world sending them letters, and they've got buy money symbols. I want to buy your apartment next to it, and it's all flashy, and maybe that works for some people, but these type of people are so put off. They're like worried about a scam all the time.
Mhm.
So this when you do what you say you're going to do, you show up and you perform, like it really goes the distance with these people. So I'm hoping that the 32 unit will be.
Did you even negotiate on this one? I mean, the price seems extremely reasonable.
It was 950 is what he wanted at the beginning. So got down 75 grand. So yeah,
I mean, you take that all day, but it's like, it's also, you don't want to push, I think to your point, you don't want to crank too hard and break it, right?
It's
Where
a function of the market cycle. I mean, that's where you are right now. Maybe this deal 2 years ago would have traded for over $1 million, but now there's you want to leave a little meat on the bone for the seller as well, because I think you don't want to like antagonize them, like Aaron just said, because if you put him off and you do the deal, but he doesn't feel as if he won or he got something out of the deal, you're not going to get a sniff out of the next deal. And you have to understand what other assets they have. And in a smaller town, smaller market, word gets around that Aaron's a tough person to work with. He squeezed every nickel out of this deal. He dragged his feet. He barely closed. That word gets
he
around.
retraded on the windows.
Mhm.
Yes, that was you, Jake. That wasn't Aaron. So,
Okay, sorry.
So what's the next slide? Is financing?
Yeah, well, yeah, just to go along with that real quick for a second, when the guy we were asking about the details, and I was trying to get the price down, where one of the main things was the insurance was higher now, and he showed what his insurance was. I said, "Hey, Dewey, the insurance is higher now. What is a fair resolution for this? What do you think we can do that's fair?" And then I just be quiet. If I use the word fair, it's like, "Oh, do you really think that's fair?" Like, "Oh, is it fair?" I just really have good luck with the word fair. What do you think's a fair deal here? Well, okay. I mean, sometimes they'll come down a little, but
Dewey.
Dewey. I have every wholesaler in the world looking up Dewey's names after this.
I mean, Chuck.
Lessons learned.
Okay, lessons learned. There are multiple ways to do deals. Guys, get in the game. Look for pro-business municipalities where you're treated best. And just find ways to hold real estate long-term. I mean, investing is holding real estate long-term. Flipping is speculating, right? You don't want to have to get in and sell in 3 years at a higher price. That's speculating. That's not investing. Investing, buy and hold. I don't want to Bill Ham to chase me down, but buy and hold forever, right? Like, anyway, so that's, and be an easy transaction. You never know when it'll lead to something else. This guy's hopefully going to come through with this 32 unit.
And what I like about this before you end, for me, the 12 unit transaction, it's a 12 unit. If your profit per unit is 250 or $300 per unit, which I think it probably will be on this asset, 300 times 12 units is 3,600. It's almost, $4,000 a month in cash flow after you've gotten all your money back on an asset that's relatively, I don't want to say easy to manage, but it's in a great area. There's a lot, like you said, pro business.
You're turning the whole thing, so it's going to be lower repairs. Yeah.
Yeah, so it's one of those things where you've thought about your exit strategy. So buying right, thinking about your exit strategy, understanding your finance component, and this 12 unit, great. I mean, this is what I love what you're doing. You're mixing it up. You're buying smaller deals, you're syndicating larger deals, and you're trying to, bring in deals that fit your buy box and that are also, I guess, operationally easier to deal with as well.
Yep. So to finish it out, what's next? Just keep rolling in Kansas City. I'm going to be laser focused here. I feel like I've got the best backyard in the nation, so I'm going to keep focusing here. And like I mentioned, goals are simple: hold as much real estate as long as possible. And then that allows you to have these liquidity events that are really what we're looking for. Every 3 to 5 years, each asset has a liquidity event in the form of a refinance. If you stagger them out, well, that's the plan, and allows you to keep buying more stuff.
That's right, and that's how you get your money exactly. And there was
Not to go too long here, but just to kind of get back, you sort of had an epiphany when you're in Nashville about closing the gap and some of this stuff. You wanna share that real quick, Aaron? Or?
Yeah, so I've got to sit down with you, Jake, as you know, and really got the high level playbook. And so I've got this scratch piece of paper right here on my desk that we went through all the stuff. And so now definitely, there's this gap between what I'm losing to market rent and what I'm actually collecting today. And like, without going too deep, this is why I'm not just saying because you guys are on this call, whoever's here listening, Rand, they are operating at a level that no one else is operating at. Like Jake has these tricks, or I don't know, whatever you call them, strategies, where he encourages his team to work at a higher level 3-4 times what they might do just because they're chasing this metric that he places in front of them in certain ways where he's in front moving the carrot and like, here you go, guys. If you get to this, you'll get this bonus. It's just so complex that you couldn't even come up with. I couldn't never come up with it. So now it's like I'm looking at their system and trying to implement just tiny little details so that we can be better in the future. And like I said, we are so
it's little advances every quarter, and that's why we stress the quarterly priorities, the quarterly meetings, and setting the goals. Because I think every quarter you move 2 or 3 things, and then you look back a couple of years ago and holy crap, it can make a big difference. To your point, especially if you're holding for the longer term. So.
And I think, guys, to really put a bow tie in it, from my perspective at least, is you don't need to do thousands of units to become extremely wealthy. If you do I mean, Jake and I are doing like 300 units a year. If you're doing a couple of deals a year and you run them very profitably and you can control them and you do not outgrow your infrastructure, that will allow you to go do as many deals as you want. But if you put in those systems early on and you're able to become very profitable, that's what the name of the game is. I don't want hearing students joining Jake and Gino going, I don't know how much I'm making on my deals. That's the worst thing that I hear sometimes. And it's like, that's when you need to join. You can't get to that point. You need to really look at this as a real business and how are you going to run that business? And those systems are important because once you've got those dialed in, Aaron, you can go out and buy this 33 unit. It won't stress your infrastructure because you've got those systems in place. And I think that's what's really important.
Mm-hmm. Yeah, I agree. I mean, I don't want to go too long, but wealth is the definition of wealth is how much time can one sustain their quality of life without working? That's from cash flow. Okay, cash flow is from operating business systems. If my business that I operate doesn't cash flow, then I don't have a business, right? And that's what I'm trying to get to the Rand level with profit per unit. And when it gets there, the confidence and the cash to buy the next one is going to be through the roof. So
Love that.
that's the goal.
Where's your, do you have contact information? Next slide.
There you go.
Yeah. Excellent. So if anyone wants to contact Aaron, they want to have questions on the deal, possibly partnering up with him in the future, there's his email address. I mean, grab his cell number. You can shoot him a text and say, hey, Aaron, love the deal. Questions. If we haven't answered any questions tonight, I'm sure that he'd be more than happy to jump on a call with you or even email you back. Listen, brother, thanks for the pre-zo tonight. It was an awesome pre-zo.
Appreciate it, guys.
Great deal. And listen, 400 units is awesome. Continued success. Thank you.